Hey, Kelly. Yeah, the IPO market has essentially fallen off a cliff this year. Just $2.4 billion worth of listings have hit U.S. exchanges in 2022. That's just 5% of the volume that we saw last year over this same time period. That according to Dealogic. In fact, this has been the worst 3-month stretch for IPOs in 24 quarters since the beginning of 2016, when the prospect of rising interest rates ensnared the broader markets. Sound familiar? Well, it's not too dissimilar to what's going on now. Higher rates whipsawing the profitless growth tech companies that have come to epitomize the IPO market in recent years. The Renaissance IPO ETF is more than 20% lower this year, although slightly positive today. Geopolitical and pandemic uncertainty are also creating headwinds for supply chains and inflation potentially creeping into the margins, if they have them, of companies otherwise looking to debut. All that creates opacity for how to value and trade new issues, so companies that can wait to go public are choosing to do so. Chobani was set to make its debut earlier this year. It's delayed. Reddit was planning on going public in March. Well, that didn't happen since it's now April. Digital bank Chime is reportedly punting its deal to the second half of the year as well. Instacart and Stripe were considered IPO candidates for the year, but they just had their valuations slashed by Fidelity. So the IPO market may remain practically at a standstill until some of these macro factors change.
You know, I'm glad you reminded us, because I forgot all of those companies. I remember talking about it in December. You know, they're waiting in the wings. It's going to be a huge moment, and it's been a quiet one instead. Leslie, thank you.